Again, the key word here in my software is napkin calculator, right? So we get an overview of data. We don't get too granular. But what's differentiate us from other platforms is we can get to the unit count of commercial properties. For example, right, it's not the first step is you put in the property address, right, and then it generates, populates the data that we find online for the square footage of the building, for the type of the building, for how many units and bedrooms and bathroom count in this particular type building. But it's hard to find this data for commercial. And as you said, it's lagging. It's not existent actually. In Reonomy, you don't have data for bedroom and bathroom counts and for unit breakdown most of the time. Maybe there's some remarks, going to be broker remarks. But in CoStar also, there's sometimes they are, sometimes they're not. So what do?
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success.
How you doing today? Scott Kidd, the Yacht Captain Investor. I have my good friend here, Alex Kononov, and he's another multifamily investor. He's also started some multifamily software using some AI technology, which is pretty interesting. We'll get into later. How you doing today, Alex?
Very good, Scott. Thank you for inviting me.
You're welcome. I've been looking forward for this one for a while because I think you're on the right track with this software. Well, for people that don't really know you so well, tell us a little bit about yourself.
Yeah, I'm a simple guy. I didn't come from real estate, not from money, but started my real estate journey back in 2018. From small multifamily residential, then focused on large multifamily. And now I'm looking for multifamily 50 to 150 units in Midwest to acquire personally. I'm doing podcast, Path of Progress. We're going to talk about it later again. And I'm building a proprietary software to underwrite real estate.
Excellent. With everything going on, everyone uses AI as, keywords in AI. And what a lot of people are talking about with AI is they're talking about more automations and stuff. What are you using that differentiates your software compared to these other automations, how you say?
I think the key problem here that you're trying to solve is the quality of data and the solutions, right? Because all of these data providers have different kind of approach on rental comps and sales comps and the property data. Some of them really strong on residential, and other property software is really good in commercial. I'm trying to build one software for all. So imagine napkin calculator with AI twist, sort of a light version of CoStar and Reonomy or PropStream for small and residential for a fraction of the cost. And we're going to have free tiers for people too. So that's exciting.
Well, that's really great because I know that like with CoStar and a lot of the larger, more expensive softwares, there's definitely a lag in their data. How are you able to like overcome this hurdle with the lag in data? Because a lot of stuff doesn't get reported right away, and it takes some time, especially with the cities, counties, their data.
Well, we don't rely on very strict data sources, and I explain you what I mean by that. Again, the key word here in my software is napkin calculator, right? So we get an overview of data. We don't get too granular. But what's differentiate us from other platforms is we can get to the unit count of commercial properties. For example, right, it's not the first step is you put in the property address, right, and then it generates, populates the data that we find online for the square footage of the building, for the type of the building, for how many units and bedrooms and bathroom count in this particular type building. But it's hard to find this data for commercial. And as you said, it's lagging. It's not existent actually. In reality, you don't have data for bedroom and bathroom counts and for unit breakdown most of the time. Or maybe there's some remarks, going to be broker remarks. But in CoStar, also there's sometimes they are, sometimes they're not. So what we do, we have capability of uploading OM or broker sheet or investor deck to the portal, right? So you upload an existing information from sponsor or from a broker that's been verified and vetted to the portal, and then we save this information. So for future, we're always going to have this information moving forward for all of our users. And now we have the actual data that no one else have, and valid and updated data for unit count and size and amenities for that particular building. And then we're going to go through underwriting cycle. Right. Do you want me to walk you through the cycle, how we work it?
Yeah, sure. That would be great because then, I would imagine you aggregate the data, and then once the data's there, then you're able to underwrite against that. Explain a little bit about that process.
Yeah, and I want to give a little brief story because we jump right into underwriting. My background is from residential, from small multifamily and single family home, which I had. I've done FHA loans, I've done investor loans, I bought from wholesalers, a flipped house, I bought directly from owner, I different kind of loans, and I refinanced successfully my small portfolio in New Jersey before jumping into multifamily. So I tried single family, small multifamily, large multifamily on different scales, underwrote all of those assets, and I understand the hurdles what come from underwriting this process and finding the right deal and negotiating this deal. So I understand what we're looking here. So the first step is, again, the most important is our unit count and size and square footage of the building so we can compare apples to apples, right? Mm-hmm. And the next step is a market research. So first step is a property factual details, and second step is market research. And in market research, we want to know, usually general, like we always do when we underwrite real estate. If it's single family or small multifamily, we still want to know vacancy rate, which still applies to commercial property. And then for single family, small multifamily, we want to see sales comps, right? So that's how they compare apples to apples. You want to understand the value of building because of sales comps. You compare multifamily to multifamily small units, and single family, you compare the square footage, bedrooms, and bathroom size. Specific radius from the property, specific kind of criteria we're looking for the sales comps. Later on, we check rental comps because we want to understand the cash flow, right? We want to understand how much it's going to generate income. So we look for rental comps in this area, proximity close to this property. Now, the rental comps applies to all assets, right? It also applies to single family, small multifamily, and large multifamily. It just multiplies on how many units you have. If a large multifamily has 50 units and all 2 bedrooms, you still have to look for 2-bedroom rental comp in the area. And this is your Academy rental comp. Then we look for schools in the area. Especially it's important for single family and small multifamily, but also large multifamily because you want to understand if families would like to live in that area particularly. You want to look for elementary, middle school, high school, and their grade of school, right? That's what we add in right now as a feature. Now, the second part, it's called passive progress. We're looking how far is hospitals and universities. In the distance, we're looking for up to 5 miles. So it's really kind of commuter distance for residents. And we also want to know the size of those establishments. For example, in university, how many students go in there? Because there are small little universities, which is not really that important. But if it's a large university, you want to know about it. And you want to know if there's another value add or another strategy you can utilize in underwriting this property, right? It could be small multifamily, large multifamily, single family, or you do pad split, or you can do whatever you want. Oh, yeah. It's totally up to you how you want to do it. But hey, if you know there's 20,000 students going to hospital to university next door, 2 miles away, you kind of want to dig deeper. But we provided information so you can dig deeper. Again, this is overview, napkin calculator. For hospitals, we want to understand how many people work there, because it's a workforce housing, right? This is something that we have immediate pull for people who work there, and that's our pool of highly quality and stable employees in the area, right? The same for university. We want to know how many people work there as well, because university hospital is one of the major drivers for workforce housing. After that, we're looking for other passive progress. I call it passive progress part 2, and we look how far is downtown. because we know downtown is a happening place. All the fancy commercial stuff usually happens in downtown. But we also want to look how far is Whole Foods, Starbucks, and Trader Joe. The reason being because those, retail companies, and they do a lot of market research in their backend before placing any of their location in a new market. They do a ton of research, and there's two options if they are already there. It's either upcoming place. That means that something going to happen here soon as big development or big investment come into the area, and their client pool will grow substantially to what they desire, or it's already developed. It's already a good place. So it's your good markers to understand where you are. And of course, we want to know if it's a shopping center, shopping malls, something to attract people and also provide employment, right?
Mm-hmm.
After that, we look at census data. Census data is important for us because when we underwrite any kind of asset, we want to understand what's household income in that area, in that neighborhood. Well, and what's population, right? We want to be granular, and we want to first look at zip code, this particular zip code, to understand in that little submarket what is a household area, household income, what is market population in this little zip code, and of course, what is demographics, right? By the race, we want to understand if it's a workforce Spanish housing, and we want to understand what kind of demographics, racial demographics in this area, to understand what kind of product will be, what kind of clientele will be in this asset. And next step, we're looking at MSA, at a larger, broader. What part of MSA it is. So we understand populations of MSA. It could be a little city, but in Boston, for example, it could be Watertown, Massachusetts. But now we look at Boston as large MSA. It's part of the Boston. And now we know the population is not like a few 100,000, but actual population is millions. And also household income. We want to understand difference from the main city and to the smaller submarket, and if there's potential to grow, because usually when big city has bigger household income, it will gentrify the areas around it, and the household income will grow, should grow naturally, depends on many factors. And what factors it depends, we actually underwrite later on. In the same stage, we pull the latest economic growth and decline factors for this particular market. And we provide source links for you to review it. So that's interesting. So market research is done, right? We have our rental, we have comps, we have understanding. We have also cap rate for large multifamily, which is also important. And then we'll move to...
How are you tracking the cap rates? Is that from existing sales comps in the area, or is that just based on the rents to values and stuff? How are you pulling that from the aggregated data?
We just find this data. There is a way to find it with AI. So we right now utilizing that. And so far it's been working fine for us. We understand it, what's market research, because I explain you why, because there's many market research of prominent brokers have been done, and they post the stuff online. Like Marcus and Millichap, they post their articles, say a report for this in sub-market area in Q1 2025, and other plugin and do the same because they want to be thought leader, and they put it online. And what we're trying to do is trying to find this latest data, and we just find and pull it. Now, again, it's not 100% accurate. I want you guys to understand, again, this is what we can find. So the quality data, you still have to review and look, but it's a good start point. And I'll explain to you in the next stage after market research is assumptions. In this stage, you really want to look into all these assumptions. For example, if the market rental rate, we have low rental, high rental, median rental. In assumption stage, we just use median rental rate, right? Because we want to be safe and conservative for our directed. But if you do a lot of renovation and you want to increase granite countertop and to do a lot of capex on the property, and you change a nice, beautiful marble tile and new appliances, you want to be at higher rent. Probably, right? It's your business plan. Everyone's business plan unique. You can't really cookie cutter it on the one thing, but you look at the rental rate that we suggest, and you can modify it. So assumption stage, it's all modifiable. You have your cap rate, you have your vacancy. If vacancy is from 5 to 10%, 5 to 7%, you want to be conservative side, put 7%. If you know about this market really well and you very aggressive, you know that 5% is proven vacancy for your type of asset, just put 5%. It's totally fine. Again, it's your unique underwriting. So you review all these little elements. You have your cap rate, vacancy, you have your income, and then later on you have your expense. Now, we don't break down expense ratio at this stage. Maybe we'll add on as a feature. But what we do rule of thumb, nationwide numbers for expense ratio. It depends on the building size. It depends on the unit size that you count. It depends on different kind of criteria. But this is the main ones, right? If building is logic is simple. If building is newer, there's less expenses, there's less repairs. It's not falling apart. If building is really old and single family house, then you're gonna have a little more expenses. But again, if it's single family house, you offload your utilities to the tenant, so it's a different kind of ratio than two family, right? And if we're talking about large multifamily, the bigger unit count is better expense ratio. Now, if you have a newer 1980s plus building and you have 100 units, your expense ratio will be probably at 40-45%. Again, we pull this data from national aggregated data, which is very average statistical, what they have for expense ratio. And we put this data as a suggestion to you when you underwrite, and you can change and modify it in your underwriting. Next up is we have national average appreciation for the home values, like it's a 4%. We have income growth and expense growth, 3% annualized. And again, some areas is 2%, some areas 1%. You have to review it. National average number is 3 and 3, which I'm comfortable, generally speaking, with those numbers. And your repairs cost per unit. It's 10,000, 5,000, 12,000, 20,000, whatever you suggest. We have some pre-made, you can modify it, right? And then we move on to the next stage. After assumption is done and you're comfortable with your assumptions, you move on to stage 4 is basic underwriting. In this stage, we calculate NOI, we calculate stabilized value because of cap rate and because of all the values, and that's for commercial, right? For single family, it's a little different because it's by square footage, comparing apples to apples, and now we can get our value, RV value for the building. And NOI is still kind of the same. We want to understand the cash flow. And for commercial building, we also do, we have our base cap, but we also do stress testing. A few quarter points up and down to understand what could be the value. And we have a basic IRR projection with the basic common assumptions. Now, what we also doing for commercial, we will add cash flow projections and for residential. This is something we add in right now. We are working before it. I think when the episode will launch, we'll be done with that. So that'll be cool. So you'll be able to plug in numbers and have your assumptions for the cash flow projection on the next stage. But stage 4 is about stabilized value and understanding. And in stage 5 and 6, you're going to have your summary report, your key investment thesis. And what we actually add in is a chart growth. So for all of you guys that long-term investors, especially in single-family, small multifamily market, you will be able to see 5, 10, 30-year projection with annualized average 4% property growth, right? This is what historical throughout the years we had on a real estate in the US. And with 3% increase on expenses and income, you will see the NOI growth throughout the timeline for the next 5, 10, and 30 years, which is interesting, especially to see for people who is here for the long run and would like to keep assets infinitely and just to indefinitely and understand what the value will be in a time essence of the projection. Now, I keep saying the same thing, but I should have started with it. We have, guys, for start, when we launch it, we have right now beta testing. So we already have a good dozen of people who's testing it relentlessly from my mastermind network, but we'll be in public beta by the end of the month. We started with the first product is single family, small multifamily, and large multifamily. There's 3 types of assets. As soon as we launch it, beta test, beta public, and everyone likes the product and they use it and they think it's a good product, we will start adding models. My goal is to create one app for all. So imagine to have one website that you plug in any address and you drive by and you see this car wash, but you never underwrote car wash. You don't know what to do with it. You'll be surprised. I've done it. I've done self-storages, car washes. I've done mobile home parks. I am excited about real estate in general. So I already know what we need to look there. We need to look at a road count, what's the traffic on that street,
Traffic,
the competition, and there's a lot of different little markers outside of multifamily, right? Commercial, that specifically for that car wash business, and what kind of value add you can add there. And now you can plug an address and you're going to have it all again with a fraction of the cost and for free. People going to have one special underwriting. It's going to be small family or car wash or self-storage like commercial or residential space 2 per month. So you'll be able to do it on a casual people who underwrite it, who want to understand the value, or just to check your underwriting that you do on a regular basis. Or if you're an investor and you will pitch the deal, right? Hey, listen, invest in my deal. I'm sponsor. This is the best deal I ever seen before.
Yeah.
And now you have opportunity to run it through third-party software, not related to the sponsor, and get idea. And sometimes we can have different numbers than your sponsor, and it's normal. I explain you because our data, again, this is very subjective because the lead sponsor who's specifically born and raised in that area and invest in that area, he knows probably better what's happening there right now live, and data can lag. So, but you will have your quality questions ready. Now you have your report and you say, listen, my market trend shown is 1,500. How come is yours 17, 1,800?
Yeah.
And your cap rate is shown 5%, but yours is 4.5. Plus A building. Why? How did he get there? And he like, okay, this is what we do. We put in granite countertops. We increase in amenities. We add in this and this and this. And now we're doing for different kind of comp strategy here. And now we can achieve higher rents because I'm comfortable. And we have this kind of competitive market at a higher range, different classes of buildings that we compete in now. And we can get the clientele because I have those assets. And now good sponsor should welcome this now, right? They have this conversation, people warm up with conversation and everyone's happy because now investor potentially he has this questions process and now he understands what to ask. And the lead sponsor say, listen, let's talk.
Yeah, and it should breed and bring a more educated investor as well. And the reason why I was laughing because we were talking about the car wash, driving by the car wash. Actually, I did that one time with a funeral home and a grave site. One time, I found out everything there is to know because somebody sent me a graveyard, and I'd been in this family for 50 years, and it was 18 acres, and they'd only used 3 acres in 30 years. So there was still a lot more to go. But I could tell you everything that you need to know about what you need to do when you buy a funeral plot. And it goes again into the demographics, like you were saying, how many people over 65 in the area. Things like that, traffic count was not as much, but there were a lot of traffic accidents in the area, which surprisingly enough, they track that as well because more traffic accidents, more deaths, more funeral plots. So
That and now it's correlation with assisted living facilities, right? Now we want to understand what the correlation is there. And now imagine you spent a ton of research probably to understand and hey, listen, what can I do here? And you can do overview research kind of with ChatGPT and Perplexity to understand what it can do. But to get all the details will be tough because you need to have really structured questions, really quality questions to align it. And sometimes you cannot get there with first try. It takes go back and forth and a lot more reading. But imagine have something that will be able to plug in to any type of assets, and the same assisted living facility, right? It's a whole new level, a whole new approach on understanding what kind of rates and returns and again, heavy on demographic age, right? And the idea here is I have personal experience in single family, small multifamily, large multifamily. On the other asset types, I'm gonna partner up with people who is active in it. For example, mobile home park communities. I have Mari Datillo. I'm going to give him a plug here. He is an expert in mobile home park investing. He's personally owns a ton of mobile home parks, and he will help me to draft that model. And we're going to talk to other operators and self-storages, and have a lot of people in my Rolodex who know this kind of stuff. So again, it's not going to be from me consulting with ChatGPT, hey, what's actually working? It's going to be coming from people with experience who's doing that and who is trying to educate their community too, because it's important for, even if you're an investor or just bystander, trying to try to find a deal and work, they're sharing the knowledge and they want to educate as many people as possible. Now they'll be able to plug in their knowledge into their system, that person that will help people to underwrite and avoid mistakes that all of us done in the past.
Yeah, it only makes sense for you to be able to partner with these people that have experience with, because each, self-storage is a different business than assisted living. Assisted living is a different business than, say, a car wash, or even like this, a light industrial warehouse. It's completely different. So, and even office, you need an expert as well, because they're each one of those, they might go by square footage because it's commercial space, but each one has a nuanced business and everything else, and it only makes sense. So, what is your timetable to roll out this software?
Again, we are testing already. We improving it daily. We have a lot of features that we add in this and next week. So my plan to finish all the process is by the end of the month. Right. So we already at beta testing stage. So understand we actively testing all our models. We getting feedback, we're improving. And by the end of the month, we'll add this feature as LOI. So I didn't talk about it, but imagine it's one of the problems we have the quality data, right? And underwriting and checking. But the biggest issue not only is the data, right? It's also for people who starting in real estate or just doing the investment overview, but also for people who's trying to buy assets and they procrastinate on actually pulling the plug and sending that LOI. Because from the moment you underwrite real estate and you actually send a LOI, for some people it take weeks to get themselves into Word file and draft this LOI and send it out. I think it's a lot to do with people getting scared, people worry to be rejected, and more delayed, and then the property is missed, and they're like, oh, well, but you already spent so much time on underwriting. But in this case, you can in 5 minutes go from start to finish, and we added this feature in our, on our underwriting software. For paid tiers subscription, it's going to be additional feature that you'll be able to put your property address, and at the end of the final report, you can draft your LOI. It's for commercial, right? We call it LOI, letter of intent. For residential, it's an offer letter. And I know a lot of people don't know what it is, but I've been on bigger pockets from day one. And even Brendan Turner recommended to every single offer that he sent, attach your offer letter. Personalized offer letter that's going to help you have your personal feel and your offer inside it, that you can attach it and send it to the broker, and broker will send it to the seller. The reason being because there's so many buyers out there usually, and you need to differentiate yourself. With our platform for offer letter, we're going to have your unique approach. You'll be able to draft a little few lines about yourself and what you're trying to achieve. And we will draft an offer letter with help of AI, obviously, for you, and plug in numbers, property address, and information about you, make it professional looking. So now you'll be able just to take it, sign it, approve it, of course. Again, this is not a financial advice. We don't suggest you to take our offer price. This is your unique underwriting with your unique assumption. So again, you always have to take with a grain of salt and still underwrite with your own eyes, with your own hat. But if you like and you plug in the numbers, you'll be able to send it to broker right away. If it's LOI, it's even simpler. There's outlined general numbers, right, in general terms, which you can modify, and you can say how many months you need, how many days you need for due diligence, for financing, if you need financing, how much is closing from the signed PSA agreement, and so on. And now you're going to have those draft letters that you can execute right away and send it in a matter of 5-10 minutes and move on to another property that you like. And now instead of dwelling on this property for weeks, You can do this process right away. And if you're just a casual buyer, if you have your W-2 job, you're busy on yourself with other tasks, with kids, with family, now you'll be able to do it quick, even once a month, and send those LOIs. And you're gonna have much more progress unless otherwise you would send it once in a half a year, one LOI, and it's just not going anywhere.
Yeah, that's just case in point that, you do need to differentiate yourself, and you do need, if you are planning to do this, you do need to send out offers, good, bad, or indifferent. You need to get used to the process. And that really sounds like it's streamlined the whole process to get you. I like the personal touch too, for you put in a little bit of about yourself and what you're trying to achieve and say, hey, this fits my buy box, and planning to have X amount of units in a certain amount of time. I have this much in my portfolio. I live in the area. I love this area. I love investing in this area. That stuff like that. People like to see the personal touch. I know I do, because you want to see that that person's really serious about executing on that property and stuff. But all the
And if offer is the same for you who submitted an offer letter, right, to the seller, and some guys that just send a number and your
yeah,
offer match, and maybe a couple of others, but now he say, listen, me young guy with a family, or I just like to break from the W-2, and I like this investment property, but I'm gonna be working there myself. You have some personal attachment to
yeah,
it, personal feel. Now the seller I would personally, as a seller, would recommend
yeah.
offer letter offer.
Yeah, I definitely would. And this has been really great, like your whole background and how it got you to build this software. And it's really going to be a unique proposition for a lot of investors, even just part-time investors, or even just to get people past that analysis paralysis. Because I know I was laughing another time too, is because I did the same. Like, I went back and forth multiple times with the same offer, but you have to just keep making those offers so then you get past that paralysis or what have you. Because then people get to that point where, oh, they accepted the offer. Oh, what now? It's like, well, okay, then that starts the next process. There's where you actually, when you're doing your due diligence, that's where you actually drill down into your numbers to make sure that all your data is correct and that it matches what they actually showing you with the actual property. But
100%. And
yeah,
and and I wanted to add a little to the point. It's not only important the sending line, but the follow-up, right?
yeah,
Because especially this market, property setting on the for sale for many days and for months, and then they get reduction of the property. Your job as an investor, real estate investor, is to keep an eye on it. If you like this property at that price, and maybe the seller didn't take the price, they're not going to remember you for that time.
no,
And most likely they'll forget, as they have their own personal feelings. Remind of yourself, what are we actually going to do? We're going to go extra mile. And Scott,
yeah,
we add an extra feature here. We add in a mapping feature in the personal user cabinet. So all your properties that you underwrote will be mapped out on that map.
mm,
If you're out of state investor, or you just in one city, you gotta understand on what property you bid, and now you can bid
yeah,
on all properties in your market that makes sense, and put a little note to it. Send an offer then and then. This is offer. This is what I did. Be structural. Be strategic.
yeah,
Again, it's not a CRM, but it's something to help you to track stuff that what you do on a daily basis, and especially in investing with
yeah.
investing out of state or in state or whatever you want to do. But you're gonna have some structure and some map that help you organize
Well,
your
and
flow.
that's really good, because some people are a little more visual than that, so they need to see the area and see that the notes attached to it and say, okay, well, I put on this property, and maybe they're going in like a certain pattern to where all right, they'll come back to these once they come back around, because sometimes it's months with the way things are, like you mentioned, months after months these properties stay on the market, and the price needs to get down to where yours, like, maybe you're 2 or 3 million underneath what they're asking right now, but in maybe 3 or 4 months, or maybe 6 months, maybe you're closer, and then you can look, say, I offered 14 million on this one. Now they're at 12 million. I was at 11. Maybe let's see what the market is dictating, see where your price is, maybe reevaluate. So that's a great tool to where you can reevaluate everything. But I think your tool is going to be really great. It's going to be a game changer, especially for a lot of investors. I look forward to testing it myself and taking a look and sharing it with my with all my network or my group, because I think it'll be a welcome tool that'll be very helpful. But for people that are looking for you and want to find out more about what you're doing and about your software, where would they find you, Alex?
I'm everywhere on social media, guys. From Facebook, Instagram, YouTube, you can find me everywhere. I have channel Path of Progress, but my handle on all social media is Path of Pro. We have a little shorter version of Park Progress, right? Passive Pro, but
That's
there's a
true.
reason to it because we add in another level in the next few months to our journey, and it will be all revealed later on. For now, you can connect me everywhere on those platforms. I'm super active, and I'm always there. And I want to add something, Scott, for your listeners, because we have great relationship here, and I want to give something to you and to your listeners. We're gonna have special link for you, Scott. So usually we have free tier with minimal usage for monthly basis for everyone. Again, it's about giving back to community and for people break the lack into real estate. But for people who want to try more advanced features, right, and want to get more usage out of their subscription, there'll be paid tiers. It'll be not much. We'll talk about this later. But we, at a regular subscription, we give 2 weeks trial. But for your listeners and for your network, again, it's got because of you, such a good guy, we're going to give full 1 month free trial on any subscription level. So you can try as much as you want, understanding that you really like the software. And again, this is a unique proposition just for you guys because it's awesome to be here. And I would like to give back to your community as well.
Well, thank you so much for that, because I know I'll appreciate it, and I know it'll be a great benefit for everyone that's taking a look at it. And we'll make sure and put the link in the show notes and everything so that everyone can log in and try it out. And we'd definitely like to hear everybody's feedback, especially from this episode. Please feel free to share, like, and subscribe. So that we can find out about what we can more cater towards your needs. And thank you so much for being here. I appreciate you sharing this great new software that's coming out.
Thank you for having me, Scott. And we will come back probably in a month and I'll walk you through tutorial again
That'll be great.
for your listeners, and
We'll do
we'll
it. We'll
have.
do a follow up, and I'll go through my experiences, and we'll do a little back and forth. That'd be great, so that everyone gets an idea of what we're looking at. So thank you so much again for coming on.
Thank you, guys.
Well, this is Scott Kidd, the Yacht Captain and Investor Podcast. Just as a reminder, always invest in yourself. That's the best investment you can ever make. Thank you.